All right, hey everybody, this is Scott here again with my next live trading video. Today is Monday, April 4th, and in this one here, I'll be placing a brand new trade in Alibaba. BABA is the ticker symbol. And in case you're not aware, this company is basically the Chinese version of Amazon. So it's obviously based in China, and they're involved in online retail, and they pretty much sell everything under the sun, same as Amazon. And so in a very similar fashion to my last live trading video where I sold a short strangle on Roblox, I'll be doing the exact same kind of trade on Alibaba here, a short strangle, which is basically a combination of selling both an out of the money call option and an out of the money put option at the same time. And it's basically meant to be a directionally neutral strategy that's primarily meant to take advantage of high implied volatility, as I'll talk more about later in this video. And so my main reason for placing another directionally neutral trade is if we come real quick to SPY. This is an ETF that tracks the S&P 500. We'll go ahead and zoom in here on the charts a little bit. So as you can see with these white lines right here, I've noted some pretty important levels, and primarily I'm focused on this range right here with SPY. So down here is a major support level, roughly around 445-ish bucks per share. And then up top, I've drawn in a major resistance level, at least the way I see it, basically at the high of this candle here once SPY got up to about 462 bucks per share. So right now the market is trading within this range, and currently it's pretty much right in between, although perhaps a little bit closer to the upper end at the moment. And so the point I'm making here is right now I'm not very directional on this market. In fact, I'm pretty directionally neutral. Now perhaps if SPY can get back up to the highest end of this range here, then perhaps at that point I'll become a lot more bearish and place more bearish trades. And then conversely, if SPY falls down to the lower end of this range, then at that point I'll become a lot more bullish. But again, with SPY being pretty much right in between this range, that's why I'm pretty directionally neutral. And so even though Alibaba is a Chinese company, right, it is still pretty correlated to what the US market does. So if I'm directionally neutral on the US market right now, then that's why I'm placing a directionally neutral trade on Alibaba. But because it is still a Chinese stock, it therefore should give my portfolio a little bit more diversification, which is always a good thing. And then also Alibaba is one of the few stocks around right now that is still exhibiting high implied volatility, which is one of the best situations for a short strangle to take advantage of. Now, as always, before we dive in though, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, so now focusing here on the charts for Alibaba, and the first thing I want to direct your attention to is this white line right there. This is a very important level. And so in particular, all through this time, looks like December of 2021 through February of this year, this was acting as a very major support level. As you can see, there were many times where BABA was bouncing off that point. And then eventually the support level failed, as you can see very obviously here. And during this time, this was when Russia invaded Ukraine. And given that Russia and China have significant ties to each other, that's why the Chinese market had a major sell-off as well. And now, in very recent times, with the Russia-Ukraine crisis pretty much cooling off at this point, right, it seems great progress has been made in regards to peace talks between those two countries. And so that's why, as of late, we've seen a massive recovery across pretty much all equity markets. And now, once again, BABA is back to being above this range, thereby flipping this line back into support. And so far, BABA has simply just been moving sideways. And this right here, this kind of trading, or this kind of price action, I should say, is a potentially great setup for a directionally neutral strategy, like a short strangle. Right? If going forward into the coming weeks here, if Alibaba can manage to trade just like it did back in this time, then again, like I said, a short strangle or an iron condor is going to be a great kind of strategy for this. Moreover, if we come down here and take a look at the implied volatility for Alibaba, as you can see during the major sell-off here, there was a huge spike in the IV for this stock, basically a huge spike in uncertainty around BABA's future. Of course, that should be pretty obvious given that this stock sold off by almost 50% in just a few days. But even with the implied volatility having come down significantly since then due to that recovery, we are still seeing a pretty high level for the implied volatility regardless. So right now, the level is at 67.14%. That's pretty darn high for any individual stock. And this translates to an IV rank of 42%. That's pretty darn good. And also an IV percentile of 75%. Very good. So ultimately what I'm looking for here is I'm trying to assess if the prices of Alibaba options in this case are still very inflated for the time being, right? Because as an option seller, of course, I want to find the stocks with the most expensive options to sell. So whenever you see a very large spike in the implied volatility for an individual stock, you're also going to see a spike in the option prices, and that's going to make for a very opportunistic time to sell those options. And like I was showing you, even though the IV for Alibaba here has come down significantly since the high from that pretty massive spike, it is still elevated overall compared to where it usually is, right? And that's what the IV rank and IV percentile indicators will tell you. Basically, they quantify in one number how high or low the current IV for BABA in this case is compared to the past. So bottom line here, the IV of 67% or so is still much higher than usual for this stock. And therefore, the option prices for Alibaba are still going to be much higher than usual as well. Now, in terms of selecting my strikes for this trade, and again, keep in mind a short strangle, which is what I'm going to do here, is a combination of selling both an out-of-the-money call option above the current stock price and also an out-of-the-money put option below the current stock price. And that's what makes this a directionally neutral strategy. I want Alibaba to remain in between whatever strikes I select here. And so for the call side, I do think I want to pick my strike to be above this short-term range right here, right? Perhaps if BABA can manage to rally up to that point, then the highs of these candles might act as a short-term resistance point. So basically, I want to pick my call strike to be above, let's say, $130 per share, maybe 131. And then for the put side here, I definitely want to pick my strike to be below this support level, which right now is at around $110 per share. But I do also want to be extra cautious for this trade here because Chinese stocks have been very volatile recently, hence the high implied volatility. And so therefore, I'm considering backing off even further and perhaps selling a put maybe around $100 per share, maybe 101, but somewhere around that point probably. So with that being said, let's now come over to the trade tab and take a look at the option chain for Alibaba. Now for me personally, I do like to be around 30 days to expiration when placing a brand new trade. And usually I prefer to stick to the monthly expiration cycles because the vast majority of the time, the monthly contracts have the best liquidity or the most trading activity. And so unfortunately, the April monthly cycle only has 10 days left to expiration. That's way too soon. And the May expiration cycle has 46 days to go. That's a bit too long for me. Moreover, if we come up to the Analyze tab real quick and go to BABA, as you can see right there, Alibaba has earnings scheduled on May 12th. And so unless I'm specifically trying to trade an earnings announcement, then I do try to avoid those announcements at all costs because oftentimes when those earnings figures come out, the stocks tend to move by a large amount. So I want to avoid that potential large, unpredictable move as much as possible. So therefore, I definitely want to choose an expiration cycle that expires before May 12th here. So coming back to the trade tab again, I think for this trade, I'm going to go into the April 29th weekly expiration with 25 days left to go. So again, with Chinese stocks being very risky right now, I don't want to be in a trade on Alibaba for too long. So 25 days is definitely good enough for me. Let's unfold that tab. And so like I was showing you on the charts there for the call side here, I definitely want to pick my strike to be above at least $130 per share. But I think I'll go to 131 just to be a little bit on the safer side. And take note also the delta for this contract is 22. And with this trade here, I definitely want it to be very directionally neutral. I don't want to be too bearish or too bullish. So therefore, on the put side now, I also want to select an option that has a delta somewhere around 22. So perhaps the 102 strike would be a good fit. As you can see there, the delta is 20, almost exactly 22. And that definitely is below that support level at around 110 and still gives me plenty of cushion in case BABA breaks down below that point once again. And the stock could fall as low as 102, and I still would not have to do anything to defend the trade here. And so with that being said, now I can right click on this option and go to sell and then strangle. And here we go. That brings up the sell order down below. Going to sell both the 131 strike call option as well as the 102 strike put option at the same time. And for this one trade here, I'm going to collect about $436 of credit. That's very nice. And again, this is due to the fact that the implied volatility for BABA is still very high. So again, that allows me to sell these options for a very high price. And so I'll try to initially lock in a price of say 435. Again, with the weekly expiration cycles, the liquidity is oftentimes not very good. So I might have to change my price a couple times, but we'll see. And then we'll go to confirm and send and take a look at the buying power effect for this trade. It's about $1,200. That's totally fine. I do always try to allocate less than 5% of my total account value for any one trade I'm about to make. So the risk here is definitely okay. And so lastly, we'll go to send. And so no fills yet on this order here. Definitely not surprised about that. So now we'll come back to the monitor tab and find my BABA order. There it is right there. So as you can see here, my limit price is $435 like I showed you, and the mark price or the current fair price for the Strangle is still $436. But like I said, because the liquidity for weekly cycles is often not great, that's why I'll have to come down a few pennies here to get filled. So I'll right click and go to cancel and replace order. And now let's try a price of perhaps $430. Go to confirm and send. And there we go, just got filled and price improved to $431. Very nice. Awesome. So next step is to right click on the call option here and go to buy and then Strangle. So what I'm doing here is setting up my closing order on this trade. So this order is going to be set to buy back both of these contracts, 131 strike call and the 102 strike put option. There we go. And typically I set my profit target to be 50% of the maximum. So if I sold the Strangle for $431 as a starting credit, then half of that is about $215. So we'll lock in that price. And then lastly, make it a GTC order so it's always in place, and confirm and send. Great, so at this point, what I'm hoping to see with Alibaba going forward now is I want this stock to continue just trading sideways, right? Because if that does happen, then I do expect to see implied volatility to contract even further, and that will bring the prices of these options I just sold here down along with it, and that's what I want as an option seller. And then also, you can't forget about the concept of time decay, right? So again, that's simply as time marches forward, as we get closer to the expiration date basically, then that also will deteriorate the value of these options here. And hopefully, if all goes according to plan, then eventually the prices of these contracts here will decay to half price, which is where my closing order is set to buy back the contracts and book a nice profit. Now, lastly, though, if that does not happen, right, let's say BABA decides to skyrocket for some reason or plummet back down once again, at that point, I'm going to have to play some defense. And for my particular strategy here, what I will do is, let's say BABA decides to breach my call strike at 131, then at around that point, I'm going to purchase 100 shares of the stock. And that way, it would not matter how much higher the stock decides to go after that point, because this initially naked call option would be converted into a covered call option. So even if by expiration, BABA was all the way at $170 per share, then I would have the potential to walk away from the trade still with a profit. And then similarly with the put option here, let's say BABA tanks and falls below my put strike, then again, at around that point, I'm going to short 100 shares of the stock to cover the initially naked put option. And same thing, if by expiration, BABA is all the way down to $60 per share, then it would not matter. I could still have the potential to walk away from the trade with some sort of profit. But right now with BABA being basically right in between my put strike and my call strike, I don't know at the moment if I should place in a stock buying order to cover the call option or a stock shorting order to cover the put option. Basically, I need to wait to see where BABA actually decides to move over the coming days and weeks. Right, and actually to be more specific, thinkorswim here does not actually allow you to place both a stock shorting and a stock buying order at the same time. It can only be one or the other. So again, because I have no idea which one to make right now, which kind of order to create, that's why for the time being, I'm just going to set alerts. So for example, if I come up to the current price of Alibaba and click on that, then I can go to create alert. And so perhaps if this stock gets to a price of, let's say 125, about $6 away from my call strike, then I want thinkorswim to let me know. And then at that point, because the stock is now getting close to my call strike, I would then place a stock buying order to purchase those shares if it then crossed 131. So I set that price and then just come down here and click create. And then I'll do it one more time, come back up to the current price of BABA, click on that, go to create alert. And then with my put strike being at 102, let's say if Alibaba falls down to a price of maybe 107, then same thing, let me know. And then at that point, I'll make an order to short sell the stock if it then continues to fall down below 102. So lock in that price and then just click create. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.